on self-tax facilitation, but all the question that on my previous session on my SST, we go through after end of this session. Okay, so don't worry. And so thank you for you guys still joining this session. And for your information, beside exemption, there are also have facilitation that has been gazetted in the Self-Tax Act 2018. So now I will presenting on the Self-Tax facilitation, highlighting key provision under the Self-Tax Act 2018 and application procedure that benefit for you guys, whether you are manufacturer, exporter and businesses in Malaysia. So let's continue. So before we dive into the details, let me give you a brief overview of what we'll be covering today. So this section is structured around 6 key facilitation mechanisms available under the Self-Tax Act 2018. First, refund. So here we will look at conditions under which businesses can reclaim overpaid or erroneous tax, including bad debt situation. And the second one about drawback, facilities drawback. This involving claiming back sales tax on goods that are eventually exported. And the third one is on the sales tax deduction, where this is the facility that aim at reducing costs for manufacturer who buy input from non-registered source. And the fourth one is about AMES. AMES is the Approved Major Exporter Scheme program. And then the next will cover on remission, where the Minister or Custom Director General may waive tax or penalties under specific condition. And finally on review. So we will cover the process for business to appeal or request a review of decision made by the Director General of Custom. So each of the play a critical role in supporting business operation while maintaining tax compliance. So for not waste any time, let's begin with the first facilitation is on refund. Okay, begins with refund. Refund is the claiming of tax under Section 36 and 39. For refund under Section 36 is in relation to the bad debt. So here, any person who is or has ceased to be a registered manufacturer may make a claim to the Director General for a refund of a whole or any part of any sales tax has been paid by him in respect of taxable goods. And then, here a refund may be claimed by a person who is or has ceased to be a registered manufacturer. If sales tax has been paid on taxable goods, but the buyer has not made the payment, and the amount is now considered unrecoverable. So this is situation known as bad debt, which refer to an outstanding amount for taxable good, including sales tax that is due but has not been paid and is deemed irrecoverable despite all reasonable recovery effort. It is important to note that this claim must be made within 6 years from the date of the sales tax was paid. Any claim beyond this period, for example, period will no longer be eligible for a refund. So to apply this refund, you may need to apply. The claimant must submit to the JKDM by using JKDM number 2 form to the Director Custom, to Director General, along with the supporting document to show that all recovery action were taken. This provision help ensure that businesses are not unfairly burdened with when a sale falls through, but tax has been already been remitted. Okay, let's move to a facilitation that every businesses should know well. How to get your money back when too much tax has been paid. So, under Section 39 of the Sales Act 2018, if you have overpaid or mistakenly paid any sales tax such as penalty or fee, you may be entitled to a refund. But take note, this claim must be submitted within 1 year from the date of payment. You are eligible under you are also eligible under section 35(6) or 41(3), and the request has been made in the prescribed form JKDM number 2, supported by all the relevant documents. So, let me share a common real world example. So, for example, suppose your company submit a declaration for sales of your finished good, and due to a clerical error, the same invoice is declared twice. As a result, you have paid sales tax twice on the same transaction. When your finance team discovers the mistake during their monthly reconciliation, it becomes clear that a refund is needed. So, you compile the custom clear declaration form, the duplicate invoice, proof of both payment, and submit them through from JKDM number 2, and if all is in order, custom will process the application and issue a refund. So, the lesson here is simple. Always double check your declaration. Even a small duplication error can cost thousands. But if caught early, there's clear path to recover that loss. Just make sure you act within 1 year window. What happens if after 1 year, then you realize there is double taxation that you need to make the refund? So that one, you're not eligible to apply refund under this section, but you may have to submit your application direct to the Minister of Finance. So that one, you must ask under the section 35(3), because only the minister have the power to give a refund to you, and of course custom have no power to give a refund for you. So whatever exemption on the tax is all the power on minister. And next, let's look at the drawback facility under section 40 of the Sales Tax Act 2018. So, this is a key incentive, especially for businesses involved in export trading. Under this provision, the Director General of Custom may allow a full drawback refund of sales tax that has been paid on taxable goods, except petroleum, if those goods are subsequently exported from Malaysia. This applies whether the goods were imported or purchased locally from a registered manufacturer. Here how this works from a trader perspective. Let's say you operate a trading company. The source industrial equipment locally from registered manufacturer. You then export these goods to your client overseas without making any modification. Since you have paid sales tax upon purchase and those goods are now exported, you are entitled to claim back the full amount of sales tax under the drawback mechanism. It is important to maintain proper export documentation such as custom declaration and supplier invoice, and to apply within the allowable period after export. This facility is especially helpful for traders who operate on tight margins, as it allows them to stay competitive in the global market by recovering tax costs that would otherwise eat into profits. So remember, if you export what you purchase, you can claim it back. Just be sure to follow the right procedure under the Sales Tax Regulation 2018. So, now that we understand the concept, let's go through the step to apply for sell tax drawback, especially from a trader point of view. Okay. Suppose you are a trader who regularly export goods sourced from registered manufacturer or import. So when those goods are exported, here's what you need to do. Step 1, you export the goods. Ensure that export is properly declared through the custom system. Keep your bill.
Mana?
Excuse me. Sorry. Sorry, I have technical errors here. Okay, sorry. I continue back. Okay. Step 1, after the trader export the goods, ensure the export is properly declared through a custom system. Keep your bill of lading, export declaration K2 form, and sales invoice ready. Then step 2, you need to submit your drawback application by completing the JKDM number 2 form and included all the supporting document. This include your purchase invoice showing sale tax paid, proof of export, and a declaration stating that you are claiming a drawback under Section 40. Step 3, apply at the controlling station, custom station. Usually, you will submit the application at the cawangan perakaunan hasil at bahagian perkhidmatan teknik office nearest your office. So, don't make a mistake. You submit your application for drawback at the bahagian cukai dalam negeri. So for drawback application, you don't need to submit at the bahagian cukai dalam negeri, but you need to submit it under bahagian perkhidmatan teknik cawangan perakaunan hasil. So make sure you apply within 3 months from the date of your export to remain eligible. What happen if you submit the application more than 3 months? So that means you not comply the one of the regulation under regulation 17, regulation sale tax. So it might make your application will be rejected by custom officer. So step 4, if you are doing the export, you need to declare using the export need to follow the procedure at export. If using export for drawback, normally physical verification, custom may inspect the goods before export. So verify your record afterward. That's why you need important things. You need to know what is the procedure if you are exported goods which are involving in your drawback application. So after you submit the application of the drawback at the cawangan perakaunan hasil, so you need to wait for the approval. Once custom is satisfied, a decision letter will be issued and the drawback will be processed, typically as a refund directly to your account if the drawback is approved. So in short, if you are a trader who buy goods locally or import them and export them as is, this process lets you reclaim sale tax and boost your export profitability. As always, good documentation, timely submission, and compliance with export procedure are key to getting your claim approved smoothly. Okay, before you apply for a drawback, it's important to ensure you meet all 6 conditions listed under sales tax regulation. These aren't just formality. They are deciding factor for whether your claim get approved or rejected. So let's break them down with a simple scenario in mind. You are a trader exporting goods that are previously taxed at purchase. So the condition for one, first, the good must be identified to the satisfaction of senior custom officer at the export point, where it is a airport, or any official export location. Custom must be able to match the good to your claim. So, clarity in documentation and physical handling is essential. Condition 2. Next, your claim must be worth at least 200 ringgit per consignment. Small or low value shipments below that 200 aren't eligible. So make sure your export value justifies the effort of filling. So the condition number 3, you also need to export the good within 3 months from the date you pay sales tax. If you miss that window, your eligibility for a drawback lapses, even if everything else is in order. So condition number 4 require that the goods you are exporting are not prohibited from drawback under any regulation made by the Act. This means certain sensitivity or restricted goods may be excluded by law. And condition number 5, this one is often overlooked. You must submit written notice to custom or before the time of export, informing them that a drawback claim will be made. It must be in the prescribed JKDM number 2 form and confirmed by the senior officer within 3 months of export. And the condition number 6, finally, the good must be unused after importation. You cannot claim drawback on goods that has been used, modified, or consumed in any way prior to export. So they must leave Malaysia in the same condition they arrived in. In summary, if you are a trader planning to export and reclaim your tax, be sure the 6 conditions are clearly fulfilled. This keep your business compliance and your drawbacks on track. Okay, once all eligibility conditions are met, the next focus is on the drawback procedure at the export station. There are 3 components every trader must understand and comply with. First, notice. So, you are required to officially inform custom of your intention to claim a drawback. This is done through a written declaration stating, you may use the word in English, I will claim the drawback under Section 40 Sales Tax Act 2018. So this notice must be submitted using the JKDM form number 2 either at or before the time of export. And the transaction type. This is the transaction type. The correct transaction type code must be used to categorize your export. So this one you must, I believe, you're not doing, mostly company will hire the forwarding agent to do the declaration of form, right? So you must tell the forwarding agent your export is you will claim the drawback, because if you not tell the forwarding agent, they will use the transaction type as a normal export, which is E. So if you are export with a drawback, you will claim the drawback. So please remind your forwarding agent to use the correct transaction. Okay, you may use the D1 or D2 if the goods that were imported. But if the good you are purchased from registered manufacturer and then you export, that one you must tell your forwarding agent to use the D3 transaction type. And using the right code ensure that your export is properly matched to the earlier sales tax payment. And of course, the custom officer at the port area normally will request for physical examine if they see the transaction of your K2 is on D1, D2 or D3. So in some cases, custom may request a physical inspection of that good. This help to verify that the exported item are the same as those declared for drawback. So always be prepared with proper documentation and support from your logistic teams during the examination. These steps are part of the standard operating procedure for drawbacks claim at ports, whether at ports, airport or other export station. So fulfilling them correctly ensure a smooth, auditable and successful drawback process. Okay, now let's walk through the step-by-step procedure for claiming a sales tax drawback. This is 5 steps from the standard process under custom guideline. First step, import or local purchase from registered manufacturer. This process begins when you import taxable goods or purchase them locally from a registered manufacturer with sales tax paid. Make sure to keep all purchase and tax documents in order. And second, step number 2, export the goods. Next, the goods must be exported following the correct custom procedure. This includes using the appropriate declaration codes, notifying customs and preparing supporting documents like invoice and bill of ladings. Step 3, application submission. After export, you must submit your drawback claim using form JKDM number 2 to the controlling cawangan perekon hasil office at your controlling station nearest you. This needs to be done within 3 months from the export date to remain eligible. So step 4, verification by custom. A custom officer will verify your application, checking that all documentation is complete and the goods exported match the claim. They may request additional details or conduct follow-up checks. So the 5 steps, step number 5, you will receive a decision letter. If everything is in order, you will receive a decision letter approving the drawback. Once approved, the drawback is processed and returned to your business account. Each of these steps is essential for a successful drawback claim. Following them precisely not only speed up your refund but also builds credibility with custom for future application. And let's take closer look at the practical step your company must take when applying for a sales tax drawback. These are important during both the export process and the document submission stage. First, during the movement or exportation of goods, whether to a free zone, licensed warehouse or duty-free shop, you need to select the correct transaction code. As I mentioned earlier, D1 or D2 for imported goods, D3 for good purchase from a registered manufacturer. Then, you need to prepare a written notice. Lampiran J to notify custom of your intent to claim a drawback. This declaration support your eligibility and must be submitted along with your export declaration. And second once the export is complete, your company must submit a full set of supporting document. This included a company covering letter explaining the claim, the official JKDM number 2 form, a letter of authorization if you are using an agent. Then your latest company bank statement for refund for drawback transfer, a claim summary, penyata pengiraan tuntutan, and the official custom receipt. The official custom receipt that prove that you already paid the tax during importation or during the purchase. And import and export invoices, lampiran J to proof of notification during export, packing list, delivery order or any other document related to your claim. Having all these documents ready, complete and consistent will greatly increase your chance of a fast and successful approval. So remember, a clear and well-prepared application saves both time and effort and builds confidence with custom for future submission. And the next step, step 3, normally there is no need to submit custom form K1, K2 or K9 unless custom specifically request them during the further review. So only prepare this if instructed by JKDM officer. Step 4, your complete application submitted should be submitted to the cawangan perekonomian hasil or at the bahagian perkhidmatan teknik at the custom nearest you where your company is based. This is your controlling custom station for drawbacks matter. Step 5, if your application has incomplete documents or missing details, you will receive a query letter from custom. So you must respond within 30 days from the date the letter is issued, or your application will be automatically cancelled. So it's crucial to check email and post regularly after submitting a claim. Step 5. Once all documents are complete, custom will issue the application result within 30 days of receipt. You will notify of the decision approval or otherwise formally. Step 6. If your application is approved, payment will be processed within 14 days working days, provided everything is in order. However, every claim is subject to inspection, so ensure your records are clean, consistent, and audit ready. This final step highlight how important accuracy and timing are in the drawback process. One small delay or error could cost your company thousands in loss drawback. So staying organized and responsive is the key. Okay, this is the example of JKDM number 2 and the checklist document needed to be prepared if you want to apply the drawback. And here is the example, the checklist. And this is the diagram or small the responsibility of the claimant. And that's all for drawback. So I will begin with the third facilitation. It's about sales tax deduction, also known as kemudahan potongan cukai jualan. So if you look here for the drawback refund, those application need to be applied manually to the cawangan perekonomian hasil. But for the sales tax deduction is the only one facility that the application is made by system My SST. So the system My SST just now I present to you, not only for apply exemption but also can apply the sales tax deduction. So this facility is, so you can download this guide. So actually Jabatan Custom already posted the guide and the guide for the sales tax deduction facility, both dated 30 October 2019. This provide the details, framework, procedures and condition for using this facility. So now we will go through the main concept, eligibility, deduction rates, and how to apply using the My SST portal. And actually, sales tax under the Section 41A and Regulation 16, the sales tax deduction facility was introduced to address a very specific issue in the supply chain, double taxation. This facility is designed for registered manufacturer who purchase manufacturing inputs like raw material, component or packaging from trader who are not registered under sales tax under SST. So without this deduction, manufacturer end up absorbing sales tax charge by the trader and then paying sales tax again when they sell their finished good. That's a clear case of double taxation. By allowing a partial deduction of the sales tax already paid, these facilities help to reduce the tax burden and lower operating costs, especially for businesses that rely on smaller local suppliers who aren't SST registered. So think of a small factory that's by packaging from a traditional wholesale trader, like a shop that shown in the image. While the trader charges sales tax, the manufacturer can't claim exemption, but they can deduct part of the tax under this facility. This makes the system more practical and fair, especially for industry with diverse sourcing needs. So now let's look at the condition for eligibility and deduction rate under the sales tax deduction facility. To qualify, the following 4 key conditions must be met. First, the manufacturer must not be able to purchase or import the goods under exemption facility. If exemption is already available, this deduction doesn't apply. Number 2, the item purchased must be raw material, component or packaging material that will use solely in the manufacturing of taxable goods. The deduction, number 3, the deduction is calculated based on the total value of the good purchased that were subject to sales tax. Number 4, the deduction must follow the specific percentage and conditions stated in the regulation. On the right, you can see the current deduction rate. If the sales tax rate on purchased good is 5%, the deduction rate is 2%. So you only pay the tax is 3%. But if the sales tax rate is 10%, the deduction rate is 4%. So you only pay 6%. And this partial deduction helps reduce the tax cost, even though it doesn't fully offset the amount paid. Finally, all application must be made online through My SST, starting with registration, followed by the tax deduction submission for each taxable period. This facility is especially valuable for manufacturers who depend on local suppliers that are not SST registered, and it supports a more inclusive supply chains while ensuring tax fairness. Okay. So it's just now I mentioned, and then this is the sales tax. Let's now talk about the supplier condition and the invoice requirement that must be met in order to qualify for the sales tax deduction. Starting with the 4 key eligibility points. First, the taxable good must be purchased from a trader, and what we call a non-registered manufacturer. This is the core purpose of the deduction. The support sourcing from non-SST registered supplier. Number 2, the sales tax must be paid by the supplier and passed on to the registered manufacturer. In other words, the cost must be borne and reflected in the invoice. Number 3, the supplier must be not connected to the registered manufacturer. This is to prevent any any manipulation between related entities. Number 4, the purchase must be supported by an invoice from the supplier as proof of the transaction. The invoice must clearly show the name and address of the supplier, a description of the taxable goods, any discount offer, and the total amount payable. What does not connect mean? The law gives several examples. If the buyer and seller are partner, officer, or director of each other business, if they are family members, or if one directly or indirectly control the others. So, or if both are controlled by the same third party. So these rules ensure that the deduction is only claimed on arm's length transaction, where tax has genuinely paid and borne by the manufacturer. Okay. Now let's look at the actual deduction rates allowed under Regulation 60B of Regulation Sales Tax 2018 and how they works in practice. So the deduction is not based on the full tax paid, but is instead a percentage of the total purchase value depending on the original sales tax rate applied. So for goods tax at 5%, the deduction rate is 2%. For goods tax at 10%, the deduction rate is 4%. So let's take the simple example. You purchase a component at the base price 1,000 and the supplier charges 5% sales tax, adding 50 ringgit. The supplier add 50% markup, making the selling price 1,575. As the registered manufacturer, you apply 2% deduction on that 1,575 ringgit. This gives you a deduction of 31 ringgit 50 cent, which will be offset in your SST 02 return for that taxable period. While the deduction does not refund the full sales tax paid, it helps to reduce your final tax liability and encourage local sourcing from non-registered traders. Just remember, the calculation is automated in the My SST system. Once you enter your purchase details. So accuracy in the invoice data is essential. Okay, now we know the rate and condition. Let's look at how the sales tax deduction is actually applied in practice. First, all deduction must be calculated based on the rates prescribed, either 2% or 5%, depending on the original tax rate paid. The deduction is then applied directly to the total sales tax payable in your SST 02 return for that specific rate taxable period. Importantly, you can only claim deduction for purchase made within the same taxable period as your SST 02 return. Purchase made outside that period cannot be carried backward into previous return. So, however, if your deduction amount is higher than the tax payables in that period, the excess can be carried forward to the next taxable period. This ensures that no legitimate deduction is wasted. But the system also ensures you stay within the correct time frame. So accurate record keeping and timing of your SST 02 submission is critical for maximize your deduction benefits. Okay, now that we know the rates and conditions, let's look how the sales tax deduction is actually applied in practice. Okay, so now that we have covered the concept, condition and deduction rate, let's move into the practical part. How to apply the sales tax deduction using the My SST system. The application process is fully online and consists of two steps. First, you need to register that you want using the sales tax deduction. The registered manufacturer must first apply to be recognized and approved person using the sales tax deduction facility. And once approved, the My SST system will issue an approval letter with your effective date and registration number. And after you get the approval, the tax deduction entry you need to do. After registration, you can start entering deduction details for each taxable period. This include invoice data, purchase value, and supplier information. It is important to ensure the purchase date falls after the approval date. And that's all required data is submitted before the SST 02 return is finalized. In the next slide, we will go through each of these steps in detail so you will know exactly how to complete your application without error. So please bear in mind, after you click the submit button, no amendment can be made. So the application for sales tax deduction is only for the relevant taxable period. So after you click submit, no amendment can be done. So when a registered manufacturer declare SST02 tax return for the relevant taxable period, the amount of sales tax deduction will automatically fill into the SST02 tax return to be deducted from the sales tax payable for the taxable period. And this is a screenshot of the My SST portal interface, specifically the deduction period list page under sales tax deduction modules. Once your sales tax deduction facility is approved, you will see a list of taxable period here. Each row represents a specific deduction window with column for start and end dates, tax return due date, sales tax deduction number once generated, total deduction and status. Then, to begin a deduction just entry, you click the apply button next to the relevant period. You must ensure that the purchase occur within the listed period. Your deduction data is ready before the 02 submission. The system will automatically calculate the allowable deduction based on the value you entered. No manual formula is required. Remember, if you don't submit your deduction here before filling SST02, your claim for that period will be lost. So, it's critical to treat this step as part of your monthly SST compliant workflow. Here you can see the sales tax deduction registration list on the My SST portal. Once your STD application is approved, your status will be shown as approved under the status column, along with key reference number including registration, approval number, SST number, business registration number. The approval will allow you to begin entering deduction claim for each taxable period. You can use the action button to view the approved detail or cancel the registration if needed. This may be relevant for changes in business structure or disqualification. It's important to check that the correct entity, branch and SST number is listed to ensure you are claiming under the right registration. This is especially important for businesses with multiple branch or group registration. Once approved, you are eligible to start submitting deduction claims in the system, beginning from your effective date of approval. Okay, let's walk through how a registered manufacturer complete the sales tax deduction declaration using the My SST system. Step 1, the sales tax register logs in to My SST. Step 2, under the sales tax deduction modules, they select the current taxable period and enter the relevant purchase details. This includes supplier information, invoice data, and purchase amount. Step 3, once the data is submitted, the system will automatically approve the STD registration as long as all conditions are met and the period is valid. Step 4, the user can access the CJP or return module. Step 5, the declared STD amount will be auto-populated into the SST return form. This streamlines the process and reduces manual error. This automated flow ensures that valid claims are quickly reflected in your return, helping your business maintain compliance while reducing your actual tax payable. And this is the actual declaration interface in the My SST system, where the sales tax deduction STD credit item are keyed in. Each claim must be submitted with full details, invoice number, supplier name and BRN, custom order classification, description of good, applicable sales tax rate, either 5% or 10%, purchase price, and finally the system will calculate the deductible amount based on the selected rate. It is important to select the correct custom classification and ensure the tax rate match the invoice. Mistake here could lead to rejected claims or over declaration. Once completed, the user clicks save and the data will be reflected under the relevant taxable period. This systemized form makes STD, sales tax deduction declaration, more transparent, efficient and consistent for compliance monitoring by custom. And this slide highlight a critical step in the sales tax deduction declaration process. You need to selecting the correct tax rate. So as you can see here, the system provide two options, 5% or 10%. So you must select the correct tax rate based on the original supplier invoice and the type of taxable good purchase. If this is entered incorrectly, it will affect the calculation of deductible amount and may result in query or rejection of the sales tax deduction claim. The system will not allow submission without this selection. Not the rate prompt say choose tax rate. Always refer to the invoice and classification code to match the rate accurately. This ensures the amount auto-populated into your SST return is valid and fully comply. And so that's all about the sales tax deduction rate facility. So now we explore the approved major exporter scheme, or simply known as AMES. So in this scheme, this facility, if you want to apply, you need to apply manually, not using the system SST. So basically, this scheme is designed for export-oriented manufacturer who meet certain criteria and contribute significantly to the national economy through their export. So the image of on the left show a business that enjoy cost efficiently and profitable, while the factory on the right represent the manufacturing sector that qualified for AMES. Through AMES, eligible manufacturer can enjoy sales tax exemption on the importation and local purchase of raw material, components, and packaging materials. It's a powerful facility to reduce cash flow burden and enhance global competitiveness. Okay, so to support the implementation of AMES, a specific amendment was introduced in 2020 under the Sales Tax Amendment Regulation. This may visualize summaries the key provision. So Regulation 26A, that can, if you can see, is provide the definition and interpretation of term used under AMES. Regulation 26B outline the procedure for application approval under the scheme. 26C regulation explain the validity of approval, including timelines and renewal condition. Regulation 26.3 is crucial, is grant the actual exemption from payment of sales tax. Regulation 26E highlights goods that are not eligible for exemption under AMES. Regulation 26F deals with variation, suspension, and revocation of approval, giving the Director General authority to act if conditions are not met. And finally, Regulation 26G refers to sales tax due and payable if any condition of approval are breached. This provision form the backbone of AMES and ensure that the scheme is well governed and transparent and accountable. Okay. So, mainly, AMES, the scope is for trader who are trade the taxable goods, and then the goods will be export. And the second is for the manufacturer who are manufacture non-taxable goods. And of course, the goods must be export. And this AMES concept is to give the exemption from payment of sales tax, impost, or levy. And normally, to enjoy this facility, you must make sure that your export percentage for 1 year is 80%, at least 80%. So if you export is 79.9%, sorry, you're not eligible to enjoy this facility. So then why we introduce the AMES? Because traders taxable goods sales tax is paid during importation. So for manufacturer, before this, if in the morning session one of the speaker, Puan Siti Sarsia, already mentioned goods good exempted under item B, schedule item 4, schedule B, right? So because even though that exemption for export orientation also, but manufacturer who enjoy that exemption need to apportion both the finished good that export and purchase sell at the local. So that give the quite give the what we call that height hard for the manufacturer to do the approximately for the export and the local purchase. So by using this AMES facility, no need to do the apportion, and so they don't need to forecast the input which is for the finished good for export and which goes to the finished good local sales. So of course the eligibility to enjoy this facility is need to the company has been operate at least 1 year in Malaysia, and annual sale value of the taxable good is more than 10 millions, and 80% of the annual sales value of taxable goods are sales exported, direct export, or you sell to the SA. SA mean special area. Example, let's say manufacture warehouse is one of the in the special area, or free industrial manufacture in the free industrial zone. Free zone is also known as a special area. So if you sell to one of your client is in that area, is also considered as export. And also the ADA means designated area. So for example, the designated area that is Langkawi, Tioman, Labuan. So if one of your client at the Langkawi is also considered your sale is exported. Okay, so to qualify under AMES scheme, company must meet 4 key conditions. So this one yang is already I mentioned earlier. And let's now look at the who exactly can benefit for AMES scheme. On one side, we have trader of taxable goods who are exporting those goods directly. On the other side, we have manufacturer of non-taxable good. That means manufacturer of good exempted, such as those involved in the food production or pharmaceutical product, mainly is meat product, who are also exporting their product. So both this group are eligible to benefit from the sales tax exemption under AMES facilitation, provided the goods are meant for export only. However, it is important to note that local sales are not covered by this exemption. So if any portion of the good is sold locally, it will be subjected of the goods. If sold locally, it will subjected to the usual sales tax as per the Sales Tax Act. So this distinction reinforces that the scheme is focused strictly on supporting export activity and not domestic sales. And under the approved major exporter scheme, applicants can fall into 3 main categories. First, we have AMES trader, and this refers to a business that does not manufacture goods but purchase taxable goods solely for the purpose of re-exporting them. They benefit by being exempted from paying sales tax at the point of purchase. Second, we have AMES manufacturer. These are registered manufacturer that producing the good exempted. So either they are mainly exported. They can enjoy sales tax exemption on raw material and component used in their production for export. And finally, there are companies that qualify as both trader and manufacturer under AMES. This hybrid business purchase good for export while also manufacturing the exempted good and for export orientation. They enjoy the full range of AMES benefit under both roles. Categorize your business correctly is the key to ensure a smooth application and compliance with AMES condition. So, but if you goes to the third, AMES and manufacturer, both of you need the separate AMES approval. Even though you are the same company. So here, if you are doing the trader and the same time you are manufacture the exempted good, so if both you want to enjoy under AMIS facility, then you need the separate approval. Okay. Next, look specifically at the role of the trader of taxable goods under the approved major exporter scheme. A trader under AMIS is a company that does not manufacture but instead deals in trading of taxable goods, whether imported, sourced from a designated or special area, or purchased from a registered manufacturer. One approved under AMIS, this good can be acquired without need to pay sales tax upfront. This significant cash flow advantage. However, there is a strict condition: at least 80% of these goods must be exported. This export can be designation outside Malaysia or even to designated or special area within Malaysia. The remaining 20% at most can be sold locally, but here the catch: any local sales made under AMIS are subject to sales tax, which then become due and payable. So because this scheme is designed to support genuine exported by easing their tax burden, but it comes with responsibility. Company must monitor their export ratio closely to stay compliant. And also, let's now focus on the manufacture of good exempted under the approved major exporter scheme. So, under this category, company involved in manufacturing using raw material, component or packaging material can enjoy exemption from the sales tax when sourcing from import or designated and special area or registered manufacturer. So just like trader, the condition is strict. At least 80% of the finished good must be exported to qualify. Whether the export is designed to outside Malaysia or within designated or special area. For the remaining local sale up to 20%, sales tax become payable. For any local goods sold, the company must pay back the sales tax that has been previously exempted. This include any leftover or excess stock that end up sold domestically. This ensures the exemption is truly targeted toward export-oriented production and not misused for local commercial gain. So in short, manufacturers benefit greatly from this scheme, but with clear accountability if their goods shift from export to local sales. Okay, so let's take a quick look at what AMIS company are allowed and not allowed to do. For AMIS manufacturer, you can send raw material or semi-finished goods to subcontractor for some processing, but you must still finish part of the work yourself. You can't outsource everything. So, and for AMIS trader, you are allowed to do bulk breaking, basically split shipment for export in stage. But here the catch: no value added works like repacking, relabeling, or modifying the goods. If you want to dispose of any tax exempted good, get approval from the custom office first. And one more important rule: no third party export. You must hand your own export unless you follow the exact legal process. These rules are here to make sure AMIS benefit go to real exporters, not middlemen or reseller. Okay, now let's talk about what you cannot include under AMIS scheme. Some goods are strictly not eligible, no exception. First up, alcohol. That's mean wine, beer, spirit, and malt liquor not allowed. Next, cigarette and tobacco product completely excluded. And then, petroleum product are also off the list. And finally, if your item isn't on the official approved list, then it's a no-go. So, before applying, always check the list to make sure your goods qualify for exemption. And let's quickly walk through the application process for the AMIS scheme. First, get your SSM business registration, business premises license, and the right PBT form 24, 40, or 49. You also need your latest audited account, sales report, and technical formula showing how much raw material is used to produce 1 unit of output. If you have more than one branch of factory, just one application is needed for the main location. And use the AMIS 01 form, which you can get from the My SST website. Don't forget to submit separate application if you are applying as a trader and a manufacturer in this AMES scheme. Finally, submit everything to the bahagian cukai dalam negeri at your controlling custom station. That means the custom nearest to you. Okay. Once your company is approved under AMES, the status is valid for 2 years or as determined by the Director General. Before it's expired, you can renew it within 30 days of the expiry day. So, mark your calendar early and don't wait till the last minute. Most importantly, if your company fails to comply with any of the AMES condition, all previously exempted sales tax become payable. This must be settled using the AMES 02 form. So, make sure your export ratio and condition are always in check. Now, let's look how to apply for the Approved Major Exporter Scheme or AMES. First, the company must fulfill all the conditions we have just covered, such as operating in Malaysia for over a year and having at least 80% export sales. Next, submit your application using the AMES application form along with the Excel template for goods information covering section D, F, and G. These forms are eligible on the My SST portal at https://mysst.com.gov.my. Once ready, send the complete application along with supporting document to the bahagian cukai dalam negeri at your nearest zone, at your nearest state custom office. And for any inquiries or submission, you can reach out via the email provided. It's a structured process, but following it correctly ensures smooth and faster approval. And so, that's all for AMES. Now, we explore remission under Section 41 of the Sales Tax Act 2018. So, what is remission? Remission is a waiver or cancellation of tax, penalty, surcharge or fees, either partially or fully. So, the Minister of Finance has the power to remit the sales tax. Meanwhile, the Director General of Custom can remit penalty, surcharge and fees. And if you are already paid any of this and a remission is later approved, you are entitled to claim a refund. This refund is claimed through JKDM form number 2. So in short, you have paid first and remission is granted later. Don't worry, you can get your money back. And now let's talk about the last facilities about the review and appeal process under Section 60. If you are unhappy with a decision made by the Director General, so you can request a review, but you must do so within 30 days of the date of the decision. It is important to note that this process is separate from any court of tribunal. You can appeal to them during this review. Once submitted, the DG will carry out the review within 60 days or within a reasonable time frame. However, even if you are appealing, any sales tax due must still be paid. There is no automatic suspension just because a review is underway. Lastly, do keep in mind that reviews cannot be made for matters involving compound. This mechanism is there to ensure fairness while maintaining the integrity of the sales tax system. Okay, so that brings us to the end of our presentation on sales tax facilitation. So I hope the information I shared today has provided you with clarity on the procedure requirement related to the facility that has been gazetted in the Sales Tax Act. Should you have any further inquiry, require assistance, please do not hesitate to reach out. Once again, thanks you for your attention. But please stay. I will look at the chat box and answer. See on the question that you already left at the chat box. Saya nak close. Okay, so I think this is the session that you are waiting for, right? So I will go to the question from the bottom list. So from Harpreet Kaur Malaysian. So are you still here, Mr. Harpreet? And your question, if I do sales and service for MW license holder and they don't provide me with any exemption certificate, must I charge them sales and service tax? I am registered for both. Okay, here, looks here, your customer is on the license manufacturer warehouse, have a scheme under the scheme license manufacturer warehouse holder. You are, I believe you are the registered manufacturer, right? So one of the responsibility of the register manufacturer must charge the tax on the finished good. But for your secure, you can actually for license LMW holder, they have a one the certificate. One the certificate you cannot get via the my SST system, but you can ask them one of the letter that show the LMW license. So in that license, we show the um, the validity of that license, and you can check the goods that you sell to them is under their list. So actually, um, the certificate is not like the exemption certificate just now I explained to you. So that's one the letter mention their license. So you can ask them license of LMW. And of course, if you check to the section 57 sales tax act, mention that no charge will be take place if you transport the goods from Malaysia to the LMW into the special area, to the special area, because LMW is one the SW is recognized as the special area. So when you sell the goods to the LMW company, that means you looks like you transported to the LMW, you transported your goods from Malaysia to the special area. So here is deemed exported. So it's the treatment is like you export the goods from you export the good. So for your record, you can ask them the license LMW, and you can ask them the to ensure that the goods that you sell them is under the list, because all the LMW license will have the list raw material that they will purchase, that will use in the manufacturing activity. So is Mr. Harpet call, is it clear? If okay, you can reply okay. So next question. Trader bring from local MW and sell to FTZ. MW only can do drawback, correct? Okay. So here look if you are a trader, actually you can use the drawback facility, or you can use the exemption under Schedule A, item 57, Schedule A, good exempted from person exempted from payment of tax, because if you buy the good from the local manufacturer, which is of course must be registered manufacturer, because that one is only the tax point, and you sell to the FTZ or MW. FTZ or MW is considered as a special area in the Sell Tax Act. So not only you can do drawback, you can go to facility drawback, but of course you can go to the exemption under the item 57 Schedule A. But of course, if you're using the exemption under 57, you must follow all the condition for that exemption. So please look back at the exemption under 57 and check whether you are can comply all the condition. And if you want to go to drawback, is it okay? You can do a drawback, but of course drawback you need to pay first the tax and then you claim back. So it's up to you. You can but if you trade, you import that goods, that one is not eligible. You apply for exemption under 57 Schedule A. That one you only can go for the drawback facility. Okay. Is it I answering your question, Mr. Sauli Chen? If okay, please write correct. Please write okay at the chat box. Okay. Oh, share recording. Okay, I looking for the other answer. Okay. From question from Lau Jun Hong. If the supplier didn't charge SST on the goods and we are not using any exemption, then don't need to declare, right? What you don't need to declare. If the supplier didn't charge SST on the goods and we are not using any exemption, then don't need to declare, right? This sorry, Mr. Lo Jun Hong, I can't understand your question. Can you uh, write in detail more? If the supplier did, is what you mean by the supplier didn't charge SST? Because we need to look if the status of the supplier, whether the supplier is trader or the supplier is registered manufacturer. And of course, if the supplier is registered manufacturer, one of the responsibility is to charge the tax on the selling of their finished good. But if the supplier is a trader selling trader, when the trader buy, trader is not the person who need to charge the tax. And then so that's why I not your question here not very clear. So can you write the clear question by mention the supplier status? So because if you purchase from a trader not need to charge you, and there is no tax what we call tax here. So if no tax, why you need to use any exemption? So, and then your next question is the SST at the end will declare based on the purchase amount. The declaration has to based on each PO. Okay, actually SST ADM is the one method to you pay back to the custom. One of the uh, method of paying back to the custom. If you breach any condition of the exemption, so one of the method way you to pay is the using the SST ADM. So the amount that you pay, for example, you using the item under C1 and then you already buy the you already purchase the your import or purchase your raw material component using the item in item 1 schedule C, but you not use that item in your manufacturing activity. So that one, for example, the item that you pay using your exemption, you sell, you trade it. So that one is breach the condition. So that amount that you exempt, so that one you need to pay back using the SST at the end. So is it that the situation you mentioned, Mr. Lau Jun Ho? Are you here, Mr. Lau Jun Ho? Okay, if okay, you can reply okay. Okay, so Ellen Tan Swilling, if trading company import goods from overseas, can apply AMES. You can check back the application eligibility for AMES, because if trading company import goods from overseas, trading company import goods from overseas, that means that trading company, if exceeds the amount the sales turnover of the sale is more than 10 millions, and the sales is trading is under 80% export orientation, and of course when they buy the goods from overseas, they during that stage, during that importation, they can apply AMES. But to apply AMES, please ensure that you comply the condition turnover 10 millions, and 80% of your sales is export, and you are already operating in Malaysia 1 year. So if you can confirm that you can eligibility, you can apply under Amis Trader. Okay, I check the one of the question at the chat box, Mr. Ng Guan Hun. Is it Mr. Han Ng? Mr. Ng, are you here? Still here? Okay, so because I want to answer for your question, as RM under Schedule B, how do I buy imported raw material from trader without SST? As RM under Schedule B, you mentioned here RM, so I believe you are a registered manufacturer. For registered manufacturer, you're not using the schedule exemption under Schedule B, so you might go to the Schedule C. For the Schedule B is for the manufacturing who are produce the specific product. So if how do I buy imported raw material for trader without SST? So if you are M and you purchase from a trader, and then that trader will import or purchase from another registered manufacturer directly, so you can appoint them and using the certificate under item 3 schedule C. Don't use under schedule B. But if you are registered under schedule B, that means you are do under the schedule B, there is no exemption given to the third party. So mostly under the schedule B is the person that must purchase by itself or must import by itself. So there's no provision if they want use the third party. Only uh, under Schedule C they have eligible for third party purchase from the third party. So of course you must appoint them first. You must appoint the trader to purchase on behalf of you. And for Schedule B there is no for the third party. Mr. Ko Ching Eng, I appreciate to reply query below. How to calculate 10% SST deposit? Okay, for this disposal, actually you can go to the My SST portal. We are uploading the panduan on disposal, and then you may search the panduan, and first don't forget to change your SST to the versi Bahasa Malaysia. So that one, if you search that panduan disposal panduan pelupusan, in the versi English you cannot find it. So please ensure that you change first your My SST version to Malay, and then you can go to peraturan dan perundangan, and then go to the specific guide, and you can go to the panduan pelupusan. So here actually you can go to find how to calculate. Actually the SST disposal is not totally terus goes to 10%. It depends on what thing you want to dispose. Is it the raw material? Is it the scrap? Is it the finished good that has damage? So to answer your question, I need to know what's the goods that you want to dispose, and the tax rates is based on the goods. So for example, if you want to dispose raw material, and then the tax rate of the raw material is depending on HS code. So if the raw material is 5%, then the tax rate is 5%. Or if you want to dispose your scrap, your scrap waste from your production, if the code tariff of the production is 5%, then the tax of SST when you're doing the disposal is 5%. If HS code say the goods is under 10%, then it will go to 10%. So not to calculate, and then the value of the 10% is calculated based on your transaction value within you and your customer. Is go to transaction value. Okay, is it clear, Mr. Koi Ching Eng? If okay, you can drop leave the chat box. Okay. Hmm. Okay, next. Uh, Question from Puan Radia. If my company doing business for construction of labs somehow like charge in one package, have two scenario. First, design and build office and laboratory. Two, supply and installation of laboratory furniture, LEV, gas piping and deducted frame. Is taxable and need to charge 8% SST to our customer? Oh, this one is already mixed with the service tax, because in the SST don't have the tax rate 8%. So are you registered manufacturer? Because person who need to charge SST under sales tax act first, if the scope of tax imposition only take place in two area. First, if you are registered manufacturer, if you are manufacturer that manufacturing of taxable good, so and your sales turnover is already reached 500k, then you might registered under sales tax act. Once you registered, then you will charge. But if not, if you not registered, then you don't need to charge. Here I think you, this one is under service tax, your scenario. So is it you registered? Maybe you can drop down your ni, your status before your question can be answered. Okay, time's up. Go. Okay, so once again, thank you all for your attention, and I hope what I share with you all guys is benefit to your works, and I hope you enjoy my presentation. Okay, goodbyes and thank you and goodbyes.